The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to a very special edition of the Power Trading Hour. And why is it special? It's special because I'm here. And maybe because the Fed just came out with their announcement, and the futures are down a little bit, down about 6 or 7 points now. I'm not exactly sure what everybody thought that they were going to get from the Fed today. It's pretty much exactly what we thought. They moderated their language just a little bit, but they're going to continue cutting, and it doesn't look like anytime soon that they're going to put the IV morphine drip back in on buying more bonds. I think something would have to drastically change. The one thing that they did change is they basically are going to see low rates ad nauseum, and it doesn't really have anything to do with unemployment rates. They're just going to keep them low forever. And there's always a side effect to those remedies that the Fed would ingest to the American public and the world at large. We've talked about all the easy money causing tomatoes in Brazil to go up 6 times. And without any real change in the price of tomatoes here in the States. So we see a lot of problems that our easy money is causing around the world, and some problems in the United States. Mostly you can't leave your money in the bank because it's just rotting. So you're paying people to keep your money to let it rot. And doesn't look too easy at the moment. Anyway, pretty predictable. Anything below 1868, I'm claiming as a close today, a good indication that we are headed lower. I have watched the futures, not the futures, the options all week long, and in looking at them, they haven't budged. They haven't budged since Wednesday of last week. They still say that we have risk down to 1810 on the S&P cash. We have a market that's gone up on almost no volume, and I would not be surprised to see a 50-point move from the high today before expiration on Friday. I probably pretty much yelled all in yesterday, and I can't get any shorter in the market than I am now. And like I said, we were talking about playing cards. There was only one hand that could beat, I think, the hand that we had going into this announcement, and that was for the Fed just to go, we're just going to continue to throw money out, print it as fast as we can, and just run this market into a giant bubble that will burst and cause probably huge world wars and famine across most of the world. I think the easy money policies, probably right before the Second World War, the parallels with the ignoring nation-state bullies basically annexing land, the policy of appeasement. History leaves clues, and of course those that don't know their history are bound to relive it, and I can't see a lot right now that says that we aren't going down the path that probably is not the best. Of course, Winston Churchill always said that Americans will always come to the right answer after giving them an opportunity to go through every wrong one. And what can you say? If you remember anything about the start of the Second World War, basically Churchill was begging to have the U.S. enter the war. Roosevelt didn't want to risk his election because basically he got elected in 1932 on a policy of not getting involved in war, basically isolationism. And he wanted to stay as far away from it. And, of course, by starring away and letting everybody see your cards, it was pretty easy for Hitler to go ahead and take a lot of stuff. He only had to worry about the French, which weren't going to be much, and possibly the English, but all he had to do was cut off all their supplies because they were an island. And that would have been it. He would have run Europe. If he wouldn't have been so crazy and done a bunch of stupid things like attack the Russians before he handled everybody on the Western Front, he probably may have succeeded. And it's scary how close we got to the edge. But, of course, very few people know their history or care about it. And, of course, it's always different this time. And, unfortunately, almost never is it different. So we'll have to see over the next few years. Probably not anything happening tomorrow, but a general policy of appeasement would probably give the green flag. Certainly Russia thinks they've got it. And my guess is that the next round we'll see China maybe going after Taiwan, certainly after all those islands. And we're probably going to have a much riskier planet than a less riskier planet by a policy of just staying out of anything that we don't think is our particular business. Now that we've had a little time for the market to digest this, we're off 4 or 5 points on the S&P cash. And at the bottom of the hour, we are going to be having Janet Yellen with her press secretary position, giving her first presser. And we'll see if there's anything in there. I have a feeling that they're going to try to hold this market up through that. But if she doesn't give a lot more signals that the Fed is going to be throwing lots of free cash around, I expect us to probably close lower today. Even though this is expiration week, I think we could have fireworks before the end of the week, certainly before the end of the day. Probably going to see a great deal of volatility. So as we wait, well, we're going to get right to more history out here. Of course, volume has been low, even coming in to 10 o'clock this morning, 280 million shares in the first 30 minutes compared to 300 million shares yesterday and 350 million shares in the first 30 minutes the day before. So we've seen a huge pullback in volume at the end of the day and at the beginning of the day. So we will be watching it. In fact, let's get a good clue here to see what we have for the rest of the day. We now have 1.7 billion shares, which is a little lighter than yesterday. A lot of volume came in the last 10 minutes. So we'll keep an eye on that through the rest of the show. In 1720, shares of the South Sea Company, the new hot seller of speculative annuities, took off on the sharpest upswing the young British stock market had ever seen, rocketing from 218 to 320 by March 21st on rumors of financial chaos in France. And this goes into the future, or the narrative that I've been bringing up, where people have left the emerging markets. They went in to China. They're now leaving China. Then they went into the United States. Then we had a pullback, and they've gone into gold. Now they're leaving gold. And there's always that hopscotch to try to find a safe haven when the entire market is coming back. And I think the only safe haven is probably being short the market, or some markets at the moment. Of course, gold was off 26 bucks again today, and pretty much anything below that 1360 would break a uptrend line, and my thesis that maybe this was the fifth wave of gold. We'll have to see how it closes out, but it's going to be interesting nonetheless, and we'll keep an eye on it. In 1792, Wall Street had its first major crash in history. Black Monday, 6% of the Treasury bonds lost 10% of their value, and shares of the Bank of the United States dropped 12%. A friend of Alexander Hamilton borrowed too much money and was about to be thrown in debtor's prison, and set panic going through the cobblestone streets of downtown Manhattan. So volatility is something that's always around us. When we look at the Eurozone, they were off half a point, 0.5% in the FTSE. German DAX was up 0.4, Everything else fairly flat and unadmired. We also see Japan gained a little bit, 0.4. Hong Kong was pretty much flat, 0.1 higher, and the Chinese Shanghai Composite settled lower by 0.2%, erasing the bulk of its losses into the close. So pretty ugly close. Going to be wanting to watch the Shanghai tonight as it opens. The biggest problems were the property shares, as China Vanke lost 4%, and Poly Real Estate gave up 2.8%. And, of course, our strongest sector out there is housing, on a strong earnings announcement that we'll talk about later in the day. You can always give me a call at 877-927-6648, 877-927-6648, and we will talk about that in a bit. What do we have out here? I just wanted to look and see if there's anything else out here that's coming out of the news. And what can you say? We're off 4 points. Again, anything below probably 1868 for a closeout here is one more sell signal in the market. And, of course, these people can't wait to buy everything. So we are far from the bull-bear fight being over today. Let's see if there's anything else. I've got windows on top of windows on top of windows, so I've got to find something there. Okay, that's pretty good. And, of course, you can call me at 877-927-6648. You can also email me at path@tfnn.com. And post something in the den if you want me to look at it. I'll try to read all those during the break. Someone made a rather foul comment to one of the hosts last week, and I wanted a little time to think about what they had said. And I just wanted to bring this up because I saw it from, it's in Jesse Livermore's book, A Reminiscence of a Stock Operator. And I thought about it today going into this earnings, well, not the earnings, but the Fed announcement. But it is very adept, especially when you have committed all your troops onto the front. And in that case, I am bearish. But he's been talking to some guy about how easy it is to be a trader and his imaginary operations and how much money he would have made if he would have actually traded anything. And Jesse says, I think he's in his 40s or 50s already, said he turned to the guy and he says, I've heard all these stories before. And he says, it all reminds me of the old story of the man who was going to go and fight a duel the next day. And his friend asked him, he said, are you a good shot? He said, yeah, said the guy that was going to be in the duel. I can snap the stem of a wine glass at 20 paces. And he looked modest. He says, that's all very good and well. But snap the stem of the wine glass while the wine glass is pointing a loaded pistol straight at your heart. And that is the essence of trading. Things change when you have real money. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Technomental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Technomental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
The S&Ps are off 3, the NASDAQ's off 8, and we've got 1.83 billion shares again. Trying to push this market up again, but not a lot of volume coming in after the announcement. Of course, at the bottom of the hour in about 6 minutes, Janet Yellen will be doing some yelling in front of the press and trying to dodge any question of any merit by also trying to use shadow pictures to infer maybe what she truly means. I think more likely they should just use goat entrails on the top of a trash can lid in Haiti. You'd think that they just say what they really meant. I don't know what good a press conference does other than to watch people totally avoid all the answers to the questions. I think maybe this market thinks that there's still a chance that she'll come out and go full on bullish. And, of course, we're flat now on the S&Ps. And not uncommon to see these things bounce around a lot after a Fed announcement. But the question is there any juice left in the tank for a higher close? And the answer is that right now, I think during this week, the upside is extremely limited to maybe 10 points higher out here. I suspect that we would also have a maximum downside of about 181 on the SPYs. And in fact, that's what the options are saying, where people are really starting to buy protection. So anything, basically the market is set up now to accept a 60-point loss from right here before really money starts coming in from the puts. So are we too far away from that to get to there by Friday? maybe she says something, maybe something else happens. But there is a huge amount of downside risk that is built into this market. In the fact that it could drop 60 points before even the midpoint of what options on the SPYs are saying to us. So I am ready for a fast and quick market, especially with the incredibly light volume we've had the last 3 days. So I wouldn't be surprised on anything after the deal, but I have a feeling it's going to be the last 30 minutes of trading out here that's really going to tell the story. Once we're below probably 1865, if we could stay below there for 10, 15 minutes, I think the machine would take care of the rest for the end of the day. So probably going to be 3:30, I guess, before a lot of people hop on board with the downside movement if we're going to get it. But if this thing starts moving, there isn't a lot of support, probably back down to 1840 on the S&P cash. And beyond there, probably going to get real tough to see anything. Probably I'm thinking that we close out Friday at 1840 is probably 50-50 odds. Probably 1810 on the S&P cash, probably 10%, maybe 5%, something like that. So we're probably going to go back, I think, if we fail here and test out that 1840 level on the S&P cash before the end of the week. But we're going to need that probably today. And the question is whether a lot of people are going to want to step in and buy a move off the high on very light volume. Or if this is just more of the same, which is keep this market up and distribute as much shares as you can at the highs. And we've seen a great deal of it. In fact, I'm very short some very high dollar stocks, and they've all give a lot of examples of selling out sideways here after a huge move to the top. So maybe we get it in by Friday, maybe we don't, but 50-50, 1840 to the downside. Probably 70% odds I think we hit 1850 on the S&P cash, that is. So we'll take a look at that. We need some kind of real signal for me to get off at least what I believe that will be. But again, probably the last 30 minutes of the day. Anyway, I am showing the chart for the S&P or SPY options and what they're saying to us right now. And to get to pain, you'd have to have 60 points down. And with as light a volume as we've had into these highs, if this market does really start moving down with any kind of energy, I would not be surprised to see at least 184 or 183 on the SPYs before the end of the week. But we probably are going to need to break that today to get anywhere close to it. If they can hang up here at the highs, probably a good chance they can hang this out till Friday. Anyway, we'll be back in a minute. Again, you can email me at path@tfnn.com, and I'll check in the den during the break here to see anything else you may want to look at. Be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And why Andy's not here, I thought I would bring it up, and that is that since about 11 a.m. this morning, copper has had a fairly decent rally after getting creamed. And when I talked to Andy a couple of times, sometimes a week on the phone, certainly email back and forth. We were looking at the cost of production on copper, and he thought it was going to be somewhere around $2.80, and that makes it awful hard to go much lower than that. But we were thinking with all the dumping of copper, you're going to have a lot of inner swings out here that are going to pop up and down in the marketplace. So it is going to be problematic at best to say that copper is out of danger. But it looks like there are more companies that have been using metals as a backstop and cash for what they do in China, and this whole cycle of bankruptcies is probably not over, and I think it could probably continue to hammer down copper for weeks, if not months to come, depending on what the Chinese want to do. And that is, the question is, it's probably more of a issue in China. If anybody can tell me what the Chinese Politburo is going to do, then I'll listen to you, but I don't think anybody truly knows what's happening in that. Of course, off 3 points on the S&P cash. Volume is starting to pick up, 1.93 billion shares. So we'll have to see by the end of the day what's going on. But if you're watching on Tiger TV, a nice intraday move out there starting at about 11 on a nice little double bottom out here at about $2.88 on copper. Now, what did I have here? We had a lot of stocks for a market that hadn't moved pretty much all day long. We did get some stocks that started to move, and I'm going to go through a few of these while we're waiting for the market to digest what Janet is selling. Back to 2% objective. Okay. I don't see a whole lot in here that's going to change anybody's mind. And again, I have a feeling it's not what's happening in these minor fluctuations across the next hour, but the last 30 minutes of trading where people are going to have to vote with their feet. And I see volume. So every time we've had volume, the market has moved down. If that would change, and we start seeing moves up with the volume, then maybe I'd have to fold my hand being short here. I just don't see it at the moment. Anyway, a lot of stocks moving out here. Let's start with CETV, Central European Media Enterprises. This is a company that pretty much whacked back in, it's this huge volume down day, on the 30th of October. This thing hit a low, hit it with volume down to $2.03. One of the few stocks actually moving before the Fed announcement saw a fairly decent move down. Not a lot of volume, but it really looks like this intermittent bounce. A lot of issues having to do with Russia and their operations over there. But looks like this thing's probably ready to go back and start finding its lows. Horizon Pharma rose 14% today. They had good earnings and a little off their high, back down under $17. But this is one of those biotechs that are running fairly quickly. Candy, one of the stocks moving down today. This is the electric and air-powered cars over in India. They tried to sell a lot, or is it in China? Let me make sure. For some reason, I thought this was the trading companies. Okay, and China. Okay, it's China. Anyway, they're making a lot of like golf carts and electrical vehicles and all-terrain vehicles, but a lot of air-powered and electrical-powered vehicles for very short trips. This thing's been on a tear, but looks like it's actually coming down a little bit today. They are basically selling a great deal more shares off at a much lower price, and the market and probably people that held shares last night probably not liking it a whole lot. PRTA is Prothena. It's up 23%. They have a what they call underserved diseases, amyloidosis and Parkinson's with antibody-based approaches. A lot of these drugs that are all about working when your own body attacks itself, basically, is what these are. But a couple of drugs that probably look like they're going to end up doing rather good. But this Prothena, I think, is one of the big ones. Rin, not everybody's happy in China out here today. Rin off a little bit. The Beijing social-based company had a big high out here. This thing, boy, looks more like a heartbeat than anything else. But a lot of these companies out here not doing that much business. This thing does between 23 and 25 million a quarter. And to tell you the truth, their numbers came out, and this thing is off 40 or 45% in the year over year. That it's still in business is rather shocking after its run. But not everything is what it seems of course, in China. Vera Bradley, a nice move today, up about 9% earlier, still doing it 9%, on earnings that exceeded analyst estimates. 9%, coming back up on a gap right here at this $29 level. That gap has existed for a while. And the question is, did you have a lot of volume on that gap? 750,000 shares. So does that really make a lot? Well, 2.6 million shares today. So maybe a chance that it goes back and tests the October 25th high at $31. WH is WSP Holdings, kind of a penny stock out here, but it is moving. I can't remember the reason on it right now. Can't. XGTI, again, one of these stocks, just because it's a penny stock, actually looks like it's fairly moving. It was down 9%, but not a big deal out here. Again, one of these stocks that just ran, had a huge day on 3.5, and actually get back to the bottom of that. 15 million shares with less than 1 million shares on October 17th. So probably wouldn't have been a bad buy out here at 250 on March 17th. Anyway, that's the beginning of the stocks. Again, I got a caller out here. I got invested in a lot of stuff. Now all I got to do is find my IM. I got so many screens up here trying to watch the market move. It's Victor, and he's dropped again. Okay, so probably not a big deal out here. Got a couple of things. And
you've got mail.
Well, thank you. And looking for an entry point on JO. And that is from Ken. Didn't say where Ken is from. Total Return Coffee. Boy, this thing's had a nice run, starting to move back. Probably I would go for the high volume day had 1.3 million shares on the 19th of February. The high of that day was 34.46. The low was 31.42 on that date. And I bet if we do a little retracement math out here, we're probably going to find that would be 31 is 50% retracement. So, and a 382 is going to be 33.72. So when we look into that one, I mean, you're right into that candle. So I'm going to say you're probably looking at $32. Would maybe be the bottom and set up the next ABC down, and that is JO, which is coffee, of course. So that's where I'd be looking at that, at least for a decent entry point that you could get into. Lulu and LinkedIn, and that is from Mark. Again, nobody telling me where they're from, so I can't tell you. They're probably hidden. Anyway, Lulu says he's short both. I probably would have been out of Lulu. I think you've probably gotten the majority of the move out here. I can't say that there's a lot left, but maybe a test of the low if you're lucky. This thing's been creamed 3 times already. In fact, you can make a bet on this one that it's a 3-gap play on the way down. So I probably would not be short Lululemon, thinking that it's already taken most of it on the chin. And the best you're probably looking for out of this move is a test of the low of February 5th. LinkedIn, LNKD. This one had some moves. In fact, I'm not real hot on either one of these shorts right now. Let's go back here and look a little bit more. LinkedIn popped up a little bit. You had heavy volume down on the leg from 225 down to 185. It got back up to 217, 4.2 million shares, not that big a deal. But what you haven't had is any energy in this leg back down to 190. Can you get 185 again? Yeah. I just think that there are a lot of much weaker and a lot more weaker stocks out here in the market than this one. And that would be it. Not that it's not going to go down with the general market, but my guess is that it's going to be protected by because it's just got so much institutional ownership. You really need a stock when you're short on some of these more expensive ones, that one has a dubious business model. The one for LinkedIn, the ones for Google are incredibly clear and transparent business models. They are not one of those business models that's hard to figure out and or hard to ask people that do business with them, how much business are you doing with them now? With something like Facebook, really hard to figure out what the truth is. They've got that thing so muddled. So that's a dubious earnings model in my belief. LinkedIn, not so dubious. I know exactly how they make their money. I know exactly from which companies it comes from, and the reporting that they come out with quarterly gives a good idea. Facebook, not so much. And that's the ones that you got to watch, are those ones that I think a little liberty with the way that they do the counting. As my dad said, figures don't lie, but liars can figure. And that's what I'd be looking for, is some kind of dubious earnings model or incredibly huge evaluation. And LinkedIn is probably some of the better ones out there that I have seen. And again, you can give me a call at 877-927-6648, 827-99. I can't even remember it. 877-927-6648. That's it. Or you can email me like any of those other folks have done. I'll go take a dip in the den here. I've got so many windows going on. I want to see if anybody's saying anything. Okay. Dave, can we look at LVS and WIN, please? LVS. Okay. So this thing went above the previous high. Did it with volume on Las Vegas Sands with 8 million shares on the 24th of February against that January 21st high. So it did break with additional and higher volume. Nice move out here. Energy off the top, not bad. And, of course, you've had a few days where it's tried to move back. Tell you what, probably headed back in to about the $70 to $78 range, or excuse me, $75 to $78 range, where it will find support. And right now, energy is pretty good on Las Vegas Sands to the downside, so you'd have to look at it for a little bit longer. And what was the other one? I have to go back up here now. Can you look at, WIN, W-Y-N-N. Probably not a bad sector to be short, of course, with China pulling back a lot of what they're doing. But did WIN blow out on that side? You had 4.8 million shares on January 31st. You got back up there, went sideways on light volume. Have you ever had four? You haven't. Tell you what, below 219, this could see, 219 probably going to get you 189 on this one. So I like these stocks that are probably have more exposure to China out here. This one looks like it could move fairly well compared to LVS. So if I was looking for shorts, I'd be looking at WIN first, LVS a distant second. Be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. We've got a call. We actually have several callers, so we're going to try to get to them as fast as we can. Sam from San Jose, how are you doing today?
Hey, Steve, I'm doing great. How are you?
Steve?
Hello?
Yes? I can just barely hear you.
How are you?
Huh?
Hello, I'm doing good. How are you?
Good. And you wanted to talk about RIG?
Yes.
Okay. And what's your question about it?
Looking to buy it.
I tell you what, this is probably the worst sector of the oil market to probably get back in. What is making you think you want to buy this?
Well, I think they have a good dividend too, and I have been holding this stock for some time, I've always bought at this level.
Okay. I think it's probably done going down for a while. I just don't see a lot in this. Any of these, in fact, I went through them last week, any of these stocks in the oil sector that are all for offshore oil, just not getting any love whatsoever. So I would not be long them. I wouldn't short it. These things have pretty much come off. But anybody that is not involved with online drilling and fracking right now, just not getting any love in the stock market. So if you could live on your dividends, I think this thing could go sideways. I wouldn't be buying it thinking it's going up until maybe if it could go sideways through midsummer. Maybe this thing could consolidate out unless the Middle East goes into full combat mode, probably going sideways for a while.
Okay. Can you look at another one for me?
Yeah, I think we have other calls, but I can't get anybody to type anything in the window, so I have no idea. Go ahead with yours.
The triple gold ETF NUGT. Nugget.
Can you say that again?
The triple gold ETF, which is NUGT.
Oh, Nugget. Certainly we're getting our pullback, and you're probably going to think in gold that if you don't get a 50% pullback, it's going to be tough to look at. But I kind of like that around that $42 area right now. I think you've got a good chance as you get back into those dates of the February 11th and February 13th. You got some nice volume back in there that's going to act as support. We're kind of there into the top of those now, but I'd love to get a 50% retracement on these, and that's at about $42.
Okay. I think it is coming down with some light volume, right?
Yeah, hang on just a second. Someone said they had a problem losing my chart here. Anyway, go ahead.
Yeah, has it been coming down with lighter volume,
It's okay. The problem is that when we're looking at the ETF out here, especially these 3X, it's come down on okay volume. You really need to look at the contract volume for underlying gold itself, probably more than anything else. Or, as a proxy, I'd probably more be interested in looking at gold, GOLD, Randgold. This thing's coming back into its gap up from, the 3rd of March out here. And you had some fairly decent volume. You're back into that with light volume today. So I'm going to say when we look at least the things that probably make better gold stocks out here, like Gold's, GOLD, Randgold's model, looks pretty good out here.
Okay.
Okay. Well, we're going to be looking at the last 30 minutes of the trading day with you all right now. Hard to figure out what this market wants to do. We're off 3 points on the S&P cash. And see what we have for volume, 2.1 billion shares. So we will be looking at and talking to you tomorrow. See you then.